Thank you for guys for joining. Sorry about that. We had a little technical difficulties. Let me go ahead and reintroduce myself. Again, anybody out there, let me know if they have any audio issues. Um, my name is Jaqueline Morales. I'm here, a realtor here in Berks County with Realty One Group. Today we have a very special guest. I want to also thank everybody first and foremost for being patient and waiting, and for the technical difficulties we had. And number two, for joining in last week. We had a good amount of views on the page on Facebook Live and YouTube. Do highly appreciate that. Again, please follow me on both Facebook, Instagram, and YouTube. I guess they call it, the kids nowadays call it subscribe and like on YouTube. Um, Today we're gonna have a loan officer with Movement Mortgage. She came from El Salvador uh, when she was 13. She had to adjust her lifestyle and learn a new language. In 2012, she got into the banking industry and moved to PA in 2014. While working in the bank industry, she saw that these buyers was being misinformed and needed some education, and she decided to in 2019 to get her real estate license. Then also just recently last year, she became a loan officer. Ladies and gentlemen, let me gladly introduce Jaqueline Morales with Movement Mortgage. How you doing, Jackie? Good.
Good. Can you hear me?
Yep, I can hear you loud and clear now.
Okay.
And let me see if anybody else have any issues out there. So everything sounds good according to them. Thank you, appreciate it, guys. So, um, again, let's restart the same questions I asked you before we get some audio issues here.
Okay.
How was it adjusting to lifestyle?
It was very hard. As a teenager coming to a new world, to a new country, to different cultures, different people, different food, away from family. It was really hard. Um, Learning a new language, but I am happy and I am glad where I have become now, and the opportunities that I have had coming to this country.
What made you get your real estate license?
When I was in the banking industry as a personal banker, I had multiple clients telling me that they were purchasing a home using a notary and doing it for sale by owner or rent to own. At that time, I saw the need of people being informed about the process because they were being taken advantage of. They will go through a notary, sign a document saying that they were purchasing that home, and then when that contract was about to expire, the sellers will decide to sell the house and kick them out of the house. So they lose all the money that they put down or were paying for it.
I do remember a lot of people have done it before. That's a good use for having a real estate agent to help along with that process and buying and the little things in between there that most buyers don't really know about. Um, Now, I do have a couple questions. If anybody online, you have any questions, please let me know. Hopefully the same people that disappear comes back. Um, uh, so one of the questions that I do get a lot. I do know some of these answers, but I'll let you answer them. It is, what credit do a buyer need to qualify? What's the credit requirements?
Okay. So when it comes to credit, we can go as low as 580. But let's make something clear. 620 is the lowest credit score that people will need in order to be able to qualify for any type of assistance for closing costs. Okay, with a 580, we can definitely help them purchase a home, but they will need to have all the funds for down payment and closing costs.
So no help at all.
No help at all with a
Or
580.
580.
Right.
All right. See that often. A lot of people ask me about the programs that they have. I'm actually going to touch on that next, since you brought it up. What type of programs do they have here, PA, Berks County?
So here in Berks County, there are two programs that are very known. That will be NHS, neighborhood housing, this getting the second loan to help for closing costs, and then PHFA. Both of these programs have different requirements. Now, Movement has their own program, which is called FHA Boost. Again, um, every single one of these programs have requirements that need to be met in order for the buyers to be able to qualify for them.
Uh, Now, let's kind of some of these buyers think that, hey, they still have these loan grants, $5,000, $10,000, first time home buyer grants. Now, let's clear some of these up about what is paid back. What do they need to stay there long in the home? A couple of years? Is it free money? What is it?
Okay, so with PHFA, right, they will require a 660 credit score. You can
Mm-hmm.
get up to 5% of the purchase price. The requirement is that you stay in that house for 10 years. If you live in that house less than 10 years, they will prorate whatever they gave you and you had to pay it back at the time that you sell the house.
Mm, okay. How about in regards to that? A lot of them people say they didn't know it's 5 years. It's 10 years across the board.
It is for PHFA. NHS will not have any requirements when they do the second loan because that is something that you are paying back. So once you sell the house, if you owe them, then you will have to pay the remaining balance of that second loan. And let's make it clear,
Mm.
it's not a grant. It's not free money. It's a second loan that gets added to the monthly payment that they have every month.
All right. Down payment then. How much down payment they will need? Now we know the traditional, conventional, the FHA, but let's educate some of these buyers. How much down payment they need?
For an FHA loan, the down payment is going to be 3.5%. For a conventional loan, it's going to be at 3%. If they're purchasing a second home and their DTI is high, then we will definitely need to do either a 5% or 10% down.
And how about you guys do the USDA, VA loans? How often does that come across your table?
So we do USDA loans. For the USDA loans, the property has to be on a rural area, right? In order to be able to be a USDA loan. VAs, we will also process VA loans. I don't see it a lot,
Mm-hmm.
but there are definitely things, that people who have served this country, as long as they meet the requirements for the VA, they can get a VA loan.
Now, I came across a question from someone. Uh, what is the difference between pre-approval and pre-qualification?
So pre-qualification, it's meaning that you're meeting some of the requirements, right? They haven't looked deep into your finances and into your credit, and that's a pre-qualification. A pre-approval, when you get a pre-approval, that means that that loan officer has reviewed your income, your assets, your work. You had to be employed in order to buy a house, right?
Yes.
Because you need to provide 4 pay stubs, and we need to verify that income. So that is the difference between the pre-qualification and the pre-approval.
Okay. Um, Now, when people tend to think that, all right, I'm going to go ahead and buy a house and we're going to shop around, how often does that affect the credit?
So if they want to shop around, they had to do it within the first 30 days. If they go to multiple banks and let's say 30 days have passed, they're going to get another hard pull. And it's going to make their FICO go down. It will affect their credit score. Every time their credit gets pulled, if it is after 30 days from the first time that it was run.
Mm-hmm. Now, a lot of people believe that working with, when they're buying a home, I tell them straight up, when you're buying a home in the process, don't buy nothing big, nothing major. Uh, What's the biggest thing that you saw somebody buy when they're in this process of buying a home? What's that? Oh, you did this. Are you serious?
Okay. So there sometimes people think that just because their credit was run already, they have the pre-approval, they go and shop for a home, they don't have to take care of their credit anymore and they can go and get other things, right? For example, a vehicle. And that is something that is a big no because in the process, maybe one day after closing, the same day of closing, sometimes we will have to put a supplement credit and we will have to make sure that everything is the same way as it was when I initially pulled your credit. And that's when we go like, why? Why did you get a new car? Like, why did you go and get furniture for the house when you haven't even signed yet? Why did you use your credit card when those are the little things that will affect somebody's DTI and it will make a deal to not close?
Horror story. Give me a horror story. So I know you did it. Started 2022. What's your horror story on no names, no needed, but and horror story that you had come across for a buyer, either right before closing or leading up to closing. What? Tell me the worst thing you've seen.
Um, well, probably I haven't had something really, really bad happen, but I did had this client that was told what not to do, right? And we have stipulated that his credit card was going to be paid off at closing. Happened to be that within the process, he was like, he got hurt. So he went through workers' comp for a couple of weeks. He went ahead and used his credit card like $4,000 over what he owed. And he was doing Uber, something that it wasn't disclosed at the beginning of the process. So having that second job could have make him not get the help
The hell you need?
because it's income limits too. So when I asked for a bank statement proving that he has paid his credit card out of his own money, out of his own funds, there we go. We got Uber, deposits and cash deposits because that's another thing. There is a
Oh my
big
god.
no, no, no with cash deposit when you're purchasing a home. So it was getting to the point that we were 2 weeks close to close when he, provide these bank statements, and we just had to find a way to make it work because he did something that he wasn't supposed to do.
Now, I have a horror story. This is when probably first 4 years when I first started. Uh, Same situation. I had a buyer that was just constantly spending our credit. We were just buying a home. Now this one rating was about $70,000 homes. I'm not sure if that's even around anymore. But she was just buying, grab her credit card, swipe it, buy it, pay it. We tell her, okay, stop doing it, pay it. She goes ahead and swipe it and buy it again. Lo and behold, long story short, I decided, okay, you had to pay this, and I decided to take her credit cards. I said, you're not going to touch this credit card until we close. The day we close, the day we sign, I handed you over the close. She was down for it. She was okay with it. So she just gave me the credit cards. And when we closed, I handed her the credit card back and said, now you can go buy.
Now that you mentioned that, it makes me think to my second transaction as a realtor. I did had a client who was just like yours. Um, she needed to save money for closing, and she kept using her debit card and using her debit card. And I was like, how are you going to come up with this money by the time you know that we get to closing? And she goes, well, I don't know. I'm like, I am the type of person that likes to spend. And I said, well, guess what? Your debit card is going to get a block and you're not going to be able to use it. And I will put a note on the system that if you go to any other branch, they cannot remove this hold from your debit card. And that's what I had to do.
Oh, tell you, this is where I try to educate buyers when they're buying,
Right.
but it happens too often. It does happen really often that people could just tend to buy while they buy when they're purchasing a home and jack up either the credit score or big spending. Um, cash deposits, cash deposits. Now, What would you say? Let's say to a buyer that's looking to put $1,500 automatically into her bank account to make a check. You, what's your advice on that?
Like to make a check for like deposit.
Well, she trying to think in my head that scenario here. In the initial phase of the contract, let's say that they're under contract, escrow money.
That's a big no because when you get under contract, right? And if let's say like you mentioned, you had $1,500, you go to the bank, buy a check, and that money gets deposited into your account, or you purchase that official check with cash, you will have to prove the bank where that money is coming from. And if there is no way that you can prove where that money came from, you're not going to be able to use it. Somehow, they will have to come up with that extra money, from funds that can be verified in order for us to just, ignore that cash.
Justify it. Yes, to justify the cash that
Right.
came in. Um, so don't do that, guys. You have
No.
money, please have in your bank. Do not just deposit 15, 2,000, 3,000, 10,000 in your bank. 'Cause that's a big no no.
Right, and there is another thing too, like whenever they are ready to start purchasing and you ask, like, do you have savings? They will say, yeah, how much? 10,000. Where? My half under my mattress. You still get to hear those kind of things. And then they say, well, I can use this, but no, because the money needs to be on their bank accounts between 30 to 60 days. And it
Mm.
needs to show on the last two bank statements that that money has been there for that period of time. So cash, definitely no.
Well, your advice. So what type of advice would you give them?
So if they're looking to buy, right, and they have their money in their house in cash, I will highly advise for them to deposit that money, right? Wait 30 days, and then they can start the process of talking to a lender so that they can pull credit, they can verify income and assets. And by the time that they go under contract, that money is going to be in the bank for 60 days. It's not going to be an issue, but you had to do it before.
Hmm. All right, all right. We do have a question from online. There's people actually coming back. Thank God. Um, in your opinion, where do you see the race going in the next 3 years, or so? Do you see it lowering or continue to rise?
That is something, that that's a great question. Rates right now, I don't see them going down. They're going up and down, up and down. We don't know for sure where they're going to be in a year or 2 years, but definitely, like in about 3 years, they might be going down again. There is always, a good time to purchase a home because sometimes we think a lot about the rate, interest rate. We said, oh, well, I don't want to buy right now because the interest rate is too high. I am going to wait until the market crash, or the interest rates go low. But when you think about all the things that you purchase, like car, credit cards, personal loans, all of those products, they have interest and they have high interest rates,
Yes, very high interest rates.
right?
Very, very high interest rates. Um, real quick, I'm gonna give you guys a heads up. Uh, we have a new property coming on the market very, very soon. I believe Monday, 348 West Penn Avenue, for 169.9. 3 bedrooms, 1.5 bath with a detached garage over at Commonwealth Washington School District. You guys have any questions, concerns, please contact Lucas Kramer. His information is down the bottom, 610-413-4518. Now, let's get back real quick to a question that I have for Jackie here. Um, what's the difference between, and I get this a lot from buyers. They think they see two different rates. One's interest rate and the APR. Describe that.
Okay. So their interest rate is, let's say, 6.5, right? That's your actual interest rate. The APR is the annual percentage rate when they call it, or they convert that into the annual percentage yield when you open a savings account. And that is something that is taken like into a year and then breaking down into pieces, like daily interest rate. But they need to focus on their interest rate because that's what it is, not the APR.
Yeah, when I get buyers, they see that as they're going along in the process of buying a home, and you guys send these forms out to them, documents out, and they see that number. Holy hell, they get scared.
Definitely.
They freak out. They're like, "What is this? What is this? This is not the rate that they asked me. What? I mean, who do I need to talk to about this? What's going on?" Um, so what else should they be aware of? Explain the PMI, mortgage insurance. What are the payments? When you look at the payments, is the interest and taxes included, insurance included, or is that all just different?
So when they're looking at their estimate, loan estimate, right? The payment is composed of four different things: principal, interest, taxes, and insurance. And then if it has a mortgage insurance, that will be added to that payment as well. So sometimes it can be five things into that monthly payment. And the way it's breaking down, it's that insurance and taxes, they go into the escrow account. That's where their insurance and taxes get paid every year. All right. Mortgage insurance. Mortgage insurance will drop once they hit that 20% payment. And on the loan estimate, it will show by what time, like how many years it's going to take them to get to that 20%, and then when that payment is going to drop.
Yeah. A lot of buyers, they don't understand the mortgage insurance aspect. They think, oh, insurance, okay, is the home insurance.
No, there is a misconception on that. It is not. So for an FHA loan, that's a federal insured loan, and it has its own insurance, right? The mortgage insurance. That is because in the event that the borrower don't pay, that secures that they're going to get their money back. With a conventional loan, if you do less than 20% down, you're going to have the mortgage insurance. And it's approximately sometimes 100 and something, the extra
Yes.
payment. And that's when you hit that 20% goal, that payment drops.
All right. We have two questions online. In terms of being a lender, what would you say is the number one thing you love, and what's the number one thing is your least favorite thing?
The one thing that I love is when I go to settlement. When I see that smile on my borrower's face, that is something that makes me happy. I put myself on everybody's shoes. When I see someone closing, it's like helping someone achieve that goal, that dream. It's like if it was my mom, if it was my sister, if it was my cousin. That's the way I see it. My least favorite thing is when I had to tell people you don't qualify at this time. But the good thing is that it's not just you're not ready at this time. It's the part of this is what you need to do. And if you really want to buy that house, you're going to do that. You're going to follow that plan to make it happen.
Um, the other question we have here is when does the PMI cut off? Is it based on the years or percentage?
Percentage, 20%. Once you hit the 20%. So, for example, let's say that it's going to take you 15 years to hit that 20%, right? But if you make extra payments to the principal,
Yeah.
it's going to be less than that. So, if you make that two extra payments a year, let's put it that way, then your mortgage insurance will drop in 7 years instead of 15. And that is just an example.
Now, I don't know. For me, I love horror stories. I really do. Um, what was your craziest moment so far at closing?
Um, when you when you get a couple, right, and they're doing the process on just one name, and then the other one is not on the agreement, it can get to the point where one says sign, and the one that has been doing the process, they want to sign, but the husband or the wife is not in agreement, and it can get to the point where they can say, you know what, I'm not going to sign. And
Has it happened?
it was about to happen on one of my closings, but it didn't happen.
Um, Let me see. Trying to think of one for myself. I had people who argued at closing between
Yeah.
buyer and seller. I had people who eventually it died. It got better, but um, how do you? Let me ask you this question for the buyers who are always wanting to know what's going on, what's the best thing, what's how do you update during the process? How do you update them?
So I make myself available to my buyers, and I always tell them like, you can call me, you can text me, you can email me, whatever questions you have. It doesn't matter if you have asked one time, two times. I am, willing to explain it five times if I have to, because this is a big, transaction. It's
Mm-hmm.
the biggest transaction of your life, and I want to make sure that they are informed and that they are at peace with what they're doing.
Mm-hmm. Um, Now this is gonna, I think, since this is a process by educating the buyers, let's educate them on how can they get a discounted points. Are there any discounted points at this time?
Well, when it comes to points, if the buyer has enough money or they're getting a program where they can get enough money to buy points, we are going to do it. And that's another thing that I'm glad that you touch base on, because a lot of people can go to different lenders and be like, well, they're giving me a 5.99 interest rate. Why are you giving me a 6.25? Right?
Mm-hmm.
But they were not explained that they purchased points in order to get that 5.99. So when we talk about information, once they go into settlement, they go over all these fees that they pay. And if they don't pay close attention to points, they will never know that they buy points. They will just think that that was the interest rate that the lender had, but it's not like that.
Saves them money down the road, don't it?
It does. Definitely, it does. Because when you think about it, let's say that your interest rate were going to be 7.25 and you buy points to make it 6.5. Then at the long run, on those 30 years or those 10 years that you have your house, is going to save you money.
All right. Um, Real quick to online. What special programs do you have for investors and people with I-10?
We do have programs for IT. Right now, actually, just came out this week where we have either 10% or 11% down. Because for IT, most of the times will be a 20 to 25% down of the purchase. When it comes to the investors, there is this great program. I think it's a great program because we don't have to look into all the documents, just like with any traditional loan, let's put it like that. It's called a DSCR, and that it's like what that means is debt service ratio, meaning that the mortgage that you're going to get is going to be based on the cash flow of the property. So we will look into your credit score and that you have the money for that closing cost, and it does require 20% down.
Now, I get phone calls every now and then, not a lot. Um, when the buyer closes, they're making their payments, and all of a sudden they get a letter or some information in regards about their mortgage being sold. Explain that, and how often does that happen?
When the loan is being processed, there are multiple lenders that they will do the loan, but they will not service the loan. They will have a third party company to service those loans, or they will just sell the loan. And the reason that they do that is so that they can get that cash flow to continue to do other loans.
Got it.
So that will be something that will be specified on the letter as of if they're going to sell your loan or if they're going to service your loan as well.
Another question here. Do you charge any prepayment penalties?
No, there is no prepayment penalties for traditional loans. And the only loans that you might see a prepayment penalty will be on the investment loans, like DSCRs.
Another question online here. Working as a loan consultant, what kind of advice would you give a realtor in order to make the process more smoother process? I got my own personal opinion on this, but I let her answer. Then we'll go back and forth.
That is a great question. My advice to my realtors will be to ask questions once they have that meeting with that borrower, right? Ask about employment, ask about credit, ask about savings, because this is going to save you time. And at the same time, you can help that client. You can refer them to your preferred lender, or they can go to their lender and they will be advised on what they need to do in order to get to where they need to be.
All right. I'm gonna piggyback off that question real quick. What is? I got my own biggest pet peeve or thing that you don't like the most.
Uh-huh.
Um, I got my own, so I'm gonna let you answer first. What is your thing that you don't like the most between us realtors and lenders?
There is a misconception that we have when we are real estate agents versus when we're lenders, right? We think that everybody's time is valuable. Let me put it that way. But at the same time, when your lender doesn't pick up the phone right away, and you think that they're always available, yes, I am always available to you, but at the same time, I am constantly on the phone. So if you call me and I don't answer, it's because I am ignoring you. I am not. Eventually, you will get a call back from me or a text. But that was something that it used to bother me when I used to be a realtor and I called the lender and I wouldn't get a response. Either you didn't answer my call, you didn't answer my text. I was impatient, but now that I am on this side, I understand that it's not that easy to reply right away or answer that every single call that comes in.
Now, my biggest issue that I have is very similar to that, but the communication. I truly hate that sometimes some lenders have lack of communication. They'll be happy on board in the very beginning, but when shit hits the fan, they disappear, or they never show up at closing, and you're trying to figure this out. So for me, it is the lack of communication that some lenders do have.
That is something that I agree. I completely agree with you. And that is something that I try to keep you update, through the process. And like I said, I might not answer right at that moment, but I will definitely get back to you that same day. Either with a call, either with a text. When you don't have communication and things are going wrong in the process, everybody gets frustrated. You don't know what to tell the borrower when it should be the lender who might be saying something to that borrower. And at the same time, we said that it's your reputation as well, but communication is a key.
Hmm.
When we are partners, we are a team, and it should work that way.
Yeah, easy flow. I think that working relationship kind of builds off of there. Uh, for me, is always the communication is the key. If we don't have communicate, great. We close the deal, move on, then we just don't talk to each other more.
Right.
But if we communicate and stay on board, stay on top with each other, updated, whether it's the buyer's fault or just things are just going wrong. As long as we might get a little testy, but as long as we stay in that communication, for me, that's the big thing for me in regards to communication. Um, one another question here I have, locking in interest rates. When would be a good time for the borrower to do that, for buyers to do that?
So they can definitely lock their interest rate for 90 days when they get their pre-approval so that they don't risk, for that interest rate to go up. There might be a fee associated with that, or it will be locked once they go under contract.
Okay.
Now, let me
But
clarify on that. We can do that in a conventional loan, FHA loan, as long as it is not, they're not getting any assistance. Because let's say, for example, that we're doing an FHA loan, we won't be able to lock it because PHFA, I'm sorry, has their own interest rate.
um, just to make buyers comfortable, how do you keep their information confidential?
Every application that comes in goes straight to my work computer and my work cell phone that is locked. Once I upload everything into the system or put it into folders, everything gets deleted when they send it to my work cell phone. But other than that, it will remain on my computer where nobody else but me has access to it. I completely understand, having personal information secure.
All right, good. Definitely security. A lot of stuff that's goes on out there with identity theft.
Right.
I hear buyers they either want to meet in person and talk and give out the application in person. Are you able to do that?
Yes, I am. So we do have our applications, right? I have my application in English, I have it in Spanish, and I always give them the options. What would you like to do? Would you like to do it from the comfort of your house, or would you like to meet face to face so that you can see that I'm a real person? I'm not a robot. I am here. I'm not no scammer. And like I said, I do feel comfortable doing that, and I respect that because working at the bank, I used to see a lot of those things, where people were taking money out of their accounts. Their information was, lost because somebody called them and they provide all their personal information. And now they had that issue of identity theft.
All right. Now, go a real quick 15-second break here. Want to let you guys know over there at Katana Motorsports, they give me specials on oil changes, conventional synthetic blend and full synthetic blend, up to 44.95 is starting rate, all the way up to 64.95. That's their special. Let them know that you've seen this on the podcast here. Give them a call 44-509-4926, 242 Warren Street bypass right there in Reading. Such as a set up your appointment, get that car checked out for you. Now, I do want to actually, in regards about the, uh, in regards, let me actually touch base online real quick. What it says here? What kind of advice would you have for a cash type worker, such as an Uber or Lyft driver, when it comes to preparing to buy a house and putting yourself in the best position?
That is a great question. We see those buyers a lot. And when it comes to taxes, right, we need to check 2 years of taxes. And when they go and do their taxes, they can say, oh, I made $80,000. But what they are reporting under a Schedule C is only $10,000, 15,000, or negative 5,000, which it doesn't help when you're purchasing a home. So I will highly, highly recommend you to truly report what you're making, truly report your expenses, and then your earnings, even though you had to pay taxes. It will be better for you to pay those taxes and be able to buy a house than having to be told no. We do also have programs where we can do 1099 or 12 or 24 months bank statements. But with those programs, the 3% or the 3.5% will not, qualify. It will be more money that you had to put down.
Um, so talk about that. What type of loans do you offer?
For self-employed.
Self-employed,
Right. So we have 1099. What that means is that we just base on what it shows under 1099 and not what it shows on Schedule C because of like the same thing that I was explaining now. So what they will do is full out of their gross earning, they're going to take a percentage of expenses. And if their tax preparer or CPA provides a letter saying that it's less than 50%, then we use that amount. That's a non-traditional loan. That's a broker
Hmm.
um, loan. So it's not like your regular FHA conventional loan.
Gotcha. Okay. Um, Piggybacking off of what you said there, so they want to touch up on that you're looking at the gross income or income after everything is written off. It's a touch up on what you're looking at.
Okay. So when we do a traditional loan, and when I mean traditional is FHA or conventional, right? I will look at your taxes and your 1040 can show that you earn $80,000. But when you go into your Schedule C and all the deductions are made and you go into line 30 on that Schedule C, I had to use that amount
Mm-hmm.
as your earning for the year. So let's say that line 30 shows 20,000 for 2021 and 30,000 for 2022. When I put that into our income calculations, then those 50,000 will be divided by 24, and that is going to give me your monthly income.
Mm-hmm.
And then when we look into your monthly income and your DTI, so meaning your expenses, everything that reports to your credit bureaus, credit cards, auto, furniture, whatever it is that is reporting to your credit bureaus, we cannot exceed either 45% or 50% on the back end
Mm-hmm.
of your income. And that's when you get the news saying, like you don't make enough money or you don't qualify at this time.
Now, that'll be good for us realtors who are all 1099 drivers, self-employed individuals. Um, what's the processing time from start to finish on a loan?
Alone. So movement have this thing that is called 671. That means 6 hours of underwriting, 7 days of processing, and 1 day to close. Right? In a perfect world, no any loan that doesn't need no assistance, we can close it like in a period of 2 to 3 weeks. But if you are someone that are doing PHFA or NHS, then we're looking at a 45-day from when you go under contract to when we need to close, 45 to 60 days.
So you heard it. So it takes minimum 30 days,
Minimum three
3
weeks
weeks.
to close a loan that doesn't need no assistance.
No assistance. That's minimum with you guys.
Right.
All right. You guys are licensed in every state.
We are. Myself, I'm specially licensed in PA, Colorado, and Georgia.
Oh, okay.
Right.
And then you refer if anybody for anything outside of that location.
Correct. Like my colleagues are licensed in New Jersey, New York, another one in Connecticut and Massachusetts, I believe.
Nice.
So
Or Florida.
they're working on Florida.
Working on Florida.
Yes.
Okay. Um, on the bank statement programs, how do you calculate that income? Is it based on the 12 months of deposit? Then you take it in average. How's it done? I think you touched on that, correct?
Right. With the bank statements, what they're going to do is they're going to see, they're going to take a look into your deposits coming in. They will add everything, right? Either 12 months or 24. And then out of that amount, they're going to hit you 50% of expenses. If your expenses are less than 50%, we will ask you for a letter from your CPA that states that your expenses are, let's say, 30%. So that way they can use that 70% income instead of 50.
Okay. All right. Um, what will again? I know we touched on a couple of different programs, couple of different things here. What will you give your advice to these buyers out there, from start to finish? I know we touched a lot here, but we're coming to the end here. So what advice will you give them?
So there are a couple of advices, right? A couple of things. When you're looking to buy a house, you always want to talk to someone that already purchased a home and they want to go by that advice. Let me tell you, every individual is different. Your situation is not the same as mine or your brother or your sister. So some people will say, oh, well, why are they asking you for $15,000 when I just purchased with 5,000. But how long ago? What programs did you get into it? What was your down payment? What was your credit score? What is your income? Those kind of things, right? Another thing is that people goes by what they hear on the news or they see somewhere else talking about the government is giving 25,000. The government is giving 20,000 to first time home buyers. Let me tell you something. There is no programs like that. There is no free money, no government grants that you can say, well, I don't have anything saved, but with the money that you guys are giving, I can buy a house. No, it doesn't work like that. Because, like I'm saying, when you think about it, if you purchase a home for 320 and you're going to get PHFA help, you get the 5%. Yes, it's going to be a big chunk, but that doesn't mean that you're not going to put anything out of your pocket. You have to have savings. In the market that we are right now, where we're not seeing seller assist, buyers needs to be ready. They need to be ready to buy a house. They also need to know what their monthly payment is going to be, how much they want to pay, what it is that they can afford. Because I can give you a pre-approval for 220, but what about if your monthly payment is going to be 2,500 and you only can afford or want to pay 1,300? So then we had to look into a different amount.
Looks like you got a fan over there online, Jeffrey Dorstamp. So let's go, Jackie.
That's my colleague.
Uh,
That's Jeff. So if you have anyone who speaks French or Creole, Jeff is the guy.
French or Creole?
Yes.
Okay.
So see, that's why I am wearing my culture,
Yep.
and I can tell you that I feel very, very proud because in my team, we got Josue, we got Jeffrey, we got Wilson, and myself. And we are from different places. We are bilingual, and we are happy to help, all of our customers in their own language so that they understand the process.
Mm. Um. Again, do appreciate you coming through here. We had a couple in the beginning. We had a rough. We had the audio, some technical difficulties here. I'm glad everybody tuned back in. Do appreciate you guys out there. Anybody on Facebook, you guys have any other questions? Let me know. Again,
I,
we go ahead.
No, I truly, truly appreciate, the opportunity of being here. I really think that this is helpful for a lot of people, for the ones that are watching right now,
Mhm.
people who have questions about the process. I am always available to answer any questions. So you can reach out to me. My phone number,
Go ahead.
it's, you know, you have it.
If you guys are interested, we could definitely put that on privately. If you want to send us a message in regards about her phone number, or if she wants to give it out, she can. As up to It's up to her.
Right, you can reach out to 484-470-3167. You can follow me on Facebook as well, Instagram. And like I said, any questions that you might have throughout the process, don't hesitate to ask. We are here to help and assist. And my goal is to help you to achieve that home ownership.
Once again, people, I do appreciate you guys showing up. We do apologize at the very beginning, but you guys definitely can share this on Facebook for potential buyers. It's on YouTube. Follow me, subscribe with me, and like that on YouTube. You can listen to me on Spotify. While you're on a big long car ride or don't want to hear nobody talk, just want to just listen to my beautiful voice. Please listen to. Um, so again, I do appreciate you guys' time. And real quick before we even disappear, I just got a weird question here. It says, are you related to me? Since we're both Moraleses.
No.
I don't think we are.
Something funny, you want to learn something funny about me? My last name is Bejarano. So yes, it's not Morales. The Morales is that last name that I inherit, but my last name is Bejarano. So I know we're not related.
Yeah, I figured that much. Don't know a lot of Moraleses, but I do know a few. But again, guys, do appreciate the time. Follow up. If you missed this, share it to the people you know. Share it online. Uh, Share it on Father YouTube channel, Spotify. Find me there. I would greatly appreciate it. Once again, guys, do thank you, and you guys have a blessed day. Enjoy your weekend.